All right, everybody. Hi. Hi, Brandon.
Hey Nate,
Hi.
how you doing?
This is the Pro Marketer Podcast, whether you're in tax compliance or prep or planning, accounting, whatever your niche specialty in our funky little world, we are bringing on people who are going to help you grow and help you find the tools that you need to do so and do it smart. And I've got Brandon Hall here, and I'm geeking out a little bit because he's been one of my favorite Twitter follows over the last 3 or 4 months. So I had my team reach out to him, and he graciously agreed to give us some of his valuable time to share his story. So I don't have a full bio from him. I just will tell you some of the things that I've gleaned from watching him and hearing him and some of the conversations we've had even today. He's built a $6+ million firm practice, and he's done it in a really, really interesting way. He's got really interesting thoughts about pricing, about positioning, marketing strategy. And I'll say this, he has not built his practice with our services. I'm not here like pimping out what we do. In fact, I've seen him talk about how he doesn't like marketing agencies, and I'm kind of thankful about that, and I want to hear more about that, and let's have that conversation. Anyway, Brandon, welcome. Thank you for your graciousness. I'm looking forward to what I hope to be a lively conversation.
Thanks, Nate. Yeah, excited to be here. I've liked 2 marketing agencies,
Mm,
but we've
okay.
probably worked with 8 at this point.
Wow.
Just kind of cycled through them. So yeah.
You ever work with us?
Oh, we've never worked with you guys. No,
Okay.
never worked with you guys. Yeah.
All right.
I'm sure we would like you though.
I should have asked you that. What's that?
I said I'm sure we would like you.
No, maybe not. Maybe not. No, I'm sure you would. But I should have asked you that in advance before. I should have known the answer to that if I was going to ask you that.
It's true. Yeah. If you got a good CRM, you would know, right?
I'm sure you might be in my database. We have a big database, but anyway, let me turn off the ND. Anyway, so if you would just take a few minutes and talk about your story. You're a young guy, and I feel funky that I'm saying that because I used to be the young guy. I've been in the industry since 2003, but I used to qualify for the 40 under 40 for CPA practice advisor, and I was on it for 3 years, and then I got too old. So here I am. Anyway,
you're still good. Still good. Yeah. I'm Brandon. I'm 31. Yeah. I started this firm back in 2016, so 6 years ago. My story is
I'm not good at math. That was when you were 25.
Yeah, 25. Yeah.
Bro.
Yeah. My story is that I graduated college in 2013, went up to DC to work with PwC. 3 months on the job, just not enjoying it. Wanted to basically quit corporate America forever. So I started looking for a way out. Like, how do you replace your income? Yeah.
PricewaterhouseCoopers is not sponsoring this podcast.
No, yeah. Sorry. Yeah, but I started looking around, like, how do you, I went through this like exploratory process of trying to figure out what am I passionate about, that, never ending question of finding your passion and how to replace my income. And I've always had an interest in entrepreneurship. I ran like a little mulching company. And when I say company, I mean, I had like 2 clients back when I was when I was in high school. And same thing, like I had a little mowing company that I would mow like 3 people's lawns and stuff. I always really enjoyed it.
No, if we're going to do this right, if we're going to help you become the guru that I know you need to be, you had a mulching empire and a landscaping empire.
Yeah, an empire of like $500 a year of revenue. But needless to say, was always really interested in business and in entrepreneurship. And that's why I became an accountant. I don't know how those necessarily tie, but wanted to know how to work under the hood, so to speak. So I became an accountant, went up to PwC. 3 months in, was just like, I cannot see myself doing this for years, decades, whatever. I don't have the, let me wait 15 years to make 300K as a partner or 400K as a partner, whatever it is.
Right.
So I started working on a way out and started like doing the whole find my passion thing, did a bunch of like research, a bunch of reading, listened to a ton of podcasts. And I found a website called biggerpockets.com. And BiggerPockets is a website. It's a forum, an online forum for landlords and aspiring landlords to come in and ask a bunch of questions as you're acquiring your first rental and building out your real estate portfolio. So I started asking a ton of questions on how do I buy rental property? And through that process, I noticed that a lot of people were asking tax questions. I was studying for my tax portion of the CPA at the time. So I started just testing myself, my own knowledge by answering those tax questions, and ended up like kind of getting a little addicted to it. It was a really fun thing to do. There's a lot of positivity because you would type something out and then somebody would come in and say almost immediately, thank you so much. So kind of instant positive gratification. Got addicted to it. And then over time realized, I could actually build a business off of this. And so I did. So I started building a business, went full time into the business in 2016, and then just focused on scaling it up from there. So today we have 40 or so staff. We're doing about 6 million in revenue, and we just got a lot of good systems in place, good marketing, sales systems, and good fulfillment systems in place. Wasn't always like that. Went through a lot of pain to get here. And then some of that I talk about on Twitter.
Yeah, no, and I love that. I get now, hearing the fullness of your story, why your response to like Jason Stats and people like that related to what should a struggling firm do is get on socials and DM people like crazy.
Yeah.
Because that's kind of what you did, in the sense that you found the right pond full of ideal target clients and made yourself valuable in that pond.
Exactly.
You kind of did. You stumbled into it because you were first a part of that pond, and then you realized, oh my goodness, I actually have a lot of value to bring.
I joined a community, right?
Yeah.
So the question is, first what I did is I niched, and I liked the real estate so much that I did decide.
Sorry to interrupt you, Brandon.
Yeah.
I'm teasing this out because I want to, because there's a lot of accountant traditional CPAs that, whether they hear this or not, come to this space and they haven't niched. They are local market area focused, right? And you sort of fell into it because you were a part of that community at first, but you quickly recognized it. And it was a very wise decision. Anyway, so shut up, Nate. Carry on. You said.
Yeah. Well, if you think about it, think about any online community that you are a part of. Like who do you follow online? Who do you follow on social media? If you're into weightlifting, you probably have people that you follow related to weightlifting that influence your decision-making and your habits. Same thing with cooking, same thing with any sort of sport, same thing with childcare. There's all sorts of communities out there that are being run by people are hosting the party, right? And so I stumbled into this community, and then I realized this is a community, and then I realized I needed to host the party. So I needed to be the guy for this community that everybody went to get to feel like they were getting the answer to their question. And so I just created a ton of content. I set up keyword alerts to be the first person to reply to all the forum posts. I was on this thing all day long, every single day into the wee hours of the night, and just created a lot of content just by having conversations with people. And then that turned into our content marketing machine that we have today, just kind of building on top of that. But yeah, it all started with just engaging in the community, just getting involved on a ground level, being part of that community. I got there because I was asking my own questions about how to buy rental real estate. And so that's what when I think about niching, that's what I think about. It's something that's interesting to you and something that, you really want to be part of that community for a long time.
Yes.
And if you find that niche, if you find that sweet spot, it's going to be so easy for you to create content. And when it's easy for you to create content, guess what? You're going to win. You're going to beat everybody else, because it's hard for people to create content for things that they don't like, they don't enjoy talking about. Even on Twitter.
That's a big mistake that a lot of people make in niching, is they go where the money is, or they go where they evaluate to be a ripe fruit to be plucked. And they don't have that passion underneath it. And it becomes a transparently, grasping enterprise for them.
Yeah. And these communities are everywhere. They're on TikTok, they're on Twitter, they're on Instagram, they're on Facebook, they're in private forums, they're on Discord, they're on Slack. You can find these communities anywhere. And so the goal is just to be the influencer of that community. Right. And you can do that by just answering questions that are posed. It's pretty phenomenal.
Especially in this environment with the declining demographics within our industry and the accelerating complexity of the tax code, especially for business owner types. It really, there's so much opportunity out there to find that pond and find that community. And you didn't mention this, but I also want to highlight the deeper pockets component of just to highlight that particular community. You're already saying this, and like in a secondary way, but there's lots of those kinds of websites, those kinds of Reddit forums, or wherever it might be, small or large, and coaches and consultants who don't necessarily have a relationship with a tax and accounting practitioner, but whose members need that kind of input. And so you're an accounting practitioner in particular, even on the tax planning side, golly, like there's so much opportunity out there right now.
Oh yeah. Yeah. And you can create your own too. Like if you don't know where to start, create your own.
How would you encourage somebody to do that?
I'll tell you. So you remember back in high school when you would have all these high school parties, right? And all the popular kids were the people that they were hosting the parties. They were the people that were inviting people over to their house and their parents are gone for the weekend. I never did that, but
Neither did I.
my mom's listening. But they were the popular kids. Now, why were they popular? Yeah, they may have been cool or whatever. But in reality, they were the ones that were hosting the party. If you think about any events that you go to, conferences that you go to, who are the most popular people in the room? Who are the people that everybody wants to make connections with? It's the people hosting the party, right? So host the party, go create a community and invite other people to it. The community can be self-serving. You don't even have to be involved on a daily basis, but you're the host. So we've done this on Facebook. It's a very, very low frictionless way to create a community. You spin up a group in a minute. You invite all your relevant friends to it. You can run ads in a roundabout way to the Facebook group to grow it. You mention it everywhere and you just pump people into the community. And yeah, you might say, oh, well, Facebook, whatever. It doesn't matter. Think about your average person, your average mom, your average dad that's sitting at the dinner table and they're just like, I just need a 5-minute break from my screaming toddler. What are they going to do? They're going to pick up their phone and they're probably going to go to Facebook. They may go to Twitter, they may go somewhere else, but they're probably going to go to Facebook and just check, what's going on social media. And that's your opportunity to get in front of them. So if they're in your community and you're posting inside of that community, they may just see that group name hit their screen. So you're getting in front of people passively without even trying, simply because they're part of your community and you're just engaging inside of that community. So that's why we chose Facebook to launch that. I know a lot of people take it off Facebook and stuff, but it's just, I always think
it's frictionless, as you said.
Exactly.
It's a real low-hanging kind of like, it makes it very simple for people. Where I would push back on you, not in any kind of oppositional way, but my preference, just to put this out there, this is my podcast, Brandon. All right. I like email lists even more because there you're not at the mercy of an algorithm and you're not at the mercy of like being popped up into the feed, but especially if you can treat the inbox with care and discretion and value. If you get someone to opt in to your email list, which side note, Brandon is building an awesome email newsletter. He's just starting it out, but I highly encourage anyone who's listened to this thus far to go into the show notes and just right now click on the link and get on his list, because he's putting out amazing content. And I don't say that lightly. Been around the block, 20 years in this industry, and I like it. So anyway, but my only pushback is, I think eventually these walled gardens of social media platforms, there's a new hot girl that comes around, like we're seeing that in TikTok right now, right? And so you could build your Facebook empire and see things change. You could build your Instagram following and see things change. But email service providers are still, I don't anticipate the email inbox becoming a pay-for-play environment anytime soon. It might, but there's power there. So I do encourage people to try both, right? Build that email list on top of the social thing.
Yeah, I don't think it's a one or the other. I mean,
no, it isn't. It isn't.
You have to be building an email list, so maybe we should have started there. Like,
well,
you're absolutely right. You got to.
You're talking about the front door though, and the back end of it.
I'm talking about awareness, right?
Yep.
So the question is, how do I build the email list? Well, I got to get out there first.
Exactly.
So you need a distribution channel, and so
and I'm talking about engagement. Yep.
Yeah. But what I like to do is build my own distribution channel that and I know Facebook owns it, but I own.
Sure.
I decide what influencers come in and out of that group. I get to call the shots.
No, it's awesome.
But what we do in that group is we are constantly pushing people to download different guides and free digital products. We're always trying to build that email list, to your point. Yeah. Because Facebook could pull the rug and then we're done with that community.
And, they've been pushing groups for a few years now, and I don't see that changing. I feel like that's like maybe their only edge right now is their groups scenario versus other platforms. I mean, LinkedIn also has good groups, but most people use Facebook still. and I don't see their regular news feed deprioritizing groups.
Yeah.
In fact, I only see it probably increasing. But
You have to play the algorithm game, though. I mean,
no, exactly.
Even once you're in the group, it just increases your chances of seeing our posts. So you still have to write posts or record videos in a way that's going to be engaging in order to get in front of people. But once you figure that out,
let's name that. You've been in the real estate investor world, and you've been around the accounting world for a while, some years now. So I don't want to presume that you haven't done this, but you are aware that most CPAs and accounting practitioners don't have your moxie and don't have your like ability to just, oh yeah, you just go into the group, be the party host, way easier said than done. Right. And I can tell you this from working in the industry and thousands of clients, paid clients over the years, that's not like a real easy task for them to dub themselves and go. And I agree with you that that's the way. And that's what I did. And I think that's a fast way, but what's a slower way? Like what's, from your standpoint, like what's if you're not doing that, what would you say?
So if you were a firm owner and I was talking to you about, producing that type of content
and that freaked me out. Let's say that freaks me out.
And you said that freaks me out. I don't want to do that. My next stop would be a blog, a newsletter, and you need some sort of distribution. So a blog is
that's really funny. That's what we do for our clients. Sorry, shut up.
Well, and I didn't know that. So anyway, but you would do a blog and you would do a newsletter. So you have to think in terms of sales funnels, right? So we've got, and I know that I'm not going to nail this because I kind of think about sales funnels differently, but you've got awareness at the top, then you've got trust, and then you've got decision. That's my very simple sales funnel.
We say awareness, engagement, conversion, ascension.
There you go. Yeah.
Yep.
Yeah. And I like to say trust, because whenever I was like learning about marketing and stuff, the funnel piece always didn't really make sense to me, all the different words that they use. So I think I actually picked it up from Justin Welsh. He's a guy on Twitter that writes about being a solopreneur, but you basically just have 3 stages: awareness, trust, decision. So the question is, so my blog and my newsletter, that's trust. Right. So that's somebody has come into my ecosystem.
They've given you permission already.
Yep. But they're building a relationship with me. They're learning more about my expertise because blogging and emails is more long form content. So I get to further explain things, and I'm building that trust with them. And eventually I'll send an email and say, hey, I've got this thing. Do you want to do it? And that's where you move to decision. So you move down to decision. But the question is, if I have a blog and a newsletter, who's reading it? How do I get people into that ecosystem? And that's where you need to focus on awareness. So you need some sort of distribution channel, and social media is amazing for distribution, redistribution. There's no, like, you can go write a blog and hit go and nobody's going to see it.
Unless it's fully keyword optimized, and then maybe in a couple of weeks.
In a couple of weeks, right? Whereas you could take a truncated version of that blog, post it on Twitter, and 500 people are going to see it within 12 hours.
Sure.
And if you get good at writing on Twitter, thousands and thousands and thousands of people can see it. So you need some sort of distribution, but the goal would be to point them back to the blog, back to the email newsletter. And that distribution channel, that can be really what I tell people is any social media that you are comfortable with, any sort of content production that you're comfortable with. So that could be Twitter, writing on Twitter, could be writing on LinkedIn, could be doing TikTok videos, short videos, YouTube shorts, YouTube long videos, could be posting on Facebook, could be posting on Instagram. There's a lot of opportunity. And what I would tell people is try them all, because you might actually surprise yourself with thinking that, well, I'm not the content person. But my pushback would be, how do you know if you haven't tried? So try different content platforms to get that distribution, and just see what you like. And if you don't like something, stop doing it, and then double down on the things that you do like.
Yep. That's really good. And clearly you like Twitter. And I love Twitter. I would, if you're on Twitter and you're listening to this, I would encourage you to find Brandon and follow him, because he puts out inflammatory content, but it's the best kind. It's like he's drawing a line in the sand and being clear about what has worked for his practice and what hasn't. And I really, really appreciate that, because a lot of people put out generic content. And
there's just a lot of people that you know, they're not doing it, or they haven't done it, and they're telling everybody how to do it. And, so I'm just like, I'm doing it actively today, and here's what I'm learning as I go along. Here's how I view things. And you can disagree. That's totally cool. It's up to you. We're not going to have a fight about it. But
Sure.
I'm just telling you I'm just telling you that's what I'm trying to do on Twitter. But yeah, I love Twitter, man. I think I got my Twitter account in 2011.
Yeah.
And I was in college. I posted a bunch of weird stuff.
Sure.
And I've subsequently gone and deleted all that. But I restarted Twitter. Yeah. I restarted Twitter in February of this year.
Yeah.
I had done TikTok. I was doing TikTok I think I tried TikTok for about 45 days. And I was just like, I don't really like posting videos like this. It's too much work to try to create videos every single day. So it's like, I want something else. So I went to try Twitter, never really tried it before, and just started writing. And I love it. I mean, it's so cool to be able to connect with other CEOs of businesses through tweets.
No,
it's
exactly.
Low barrier sort of access.
Well, as I said, that's how I found you. I don't actually tweet a lot myself. I'm still in sort of the lurking stage. I have too many things going on with 7 children at home, and already plenty to do from a client side, and 20 employees. You know the drill. Yeah. I like this. I like podcasting and things like that, and writing emails. Yeah. That's my favorite. But so that's what I do, right? I mean, just like what you said, I found emailing and podcasting to be my sweet spot, and we're working on amplifying it in other ways, but whatever. That's great, man. So there's 2 other topics that I want to hear you talk about for the sake of those who might be listening. Number 1 is pricing and how you position your services. I really like what you talked about related to tax preparation being outside of the monthly retainer, and I want to hear you talk about that. And then the second thing is hiring and your hiring systems, because with 40 employees, surely you've figured out some systematic ways to do recruiting in particular, and culture making. That's got to be an important part of how you lead your team. So maybe that's 3 things, but I mean, I find them very, very similar, like hiring, recruiting, and culture making. It's all sort of in the same pot, I feel like, because I find here, at least at our company, hiring is best done from friends of my existing employees that are rock stars. And it's hard when people don't have that in place. So I want to hear you talk about that. So which one of those do you have more zeal on? You want to talk about first?
Well, I mean, I love both topics, really.
All right, cool. Let's do pricing then. Talk about
pricing. Yeah, so we fix price. Everything is fixed price. We offer tax planning services, tax compliance services, and outsourced accounting services. And every service offering except for tax prep, we have a low, middle, high plan. So we have the basic plus pro plan. And I think the thing that I do differently that I've realized, I didn't realize this was something I did differently until just a couple months ago, as I started talking to a bunch of different firm owners. The thing that I do differently is I collect the entire payment up front. So if we have a 12-month engagement, that's $4,500. I'm collecting $4,500 up front. Tax preparation is never part of the 12-month engagement.
So the 12-month engagement would be $4,500 annually. So you're talking about what is that? Yeah. I'm not going to.
And I should also say this is not
$150 a month or so, or $500 a month.
Yeah. So I don't do the subscriptions. We do monthly accounting work though. And that we do bill monthly. Okay. But for our advisory, like our planning, our calls that we're having, what people would kind of refer to as subscription, I don't do subscriptions. I do it all up front for a 12-month engagement.
And so it's like 4,500 is like your low end.
Low end. Yeah. That's the low end. Yeah. So we do 45, 65, and then I think $9,500.
Okay.
Yeah. So I collect it all up front. Now, tax preparation is an additional fee. So those engagements get scoped and priced in November and December for 80% of our clients. We do upfront pricing for those. And the reason that we price everything up front is I know by the end of December, to the tune of about 85% or so, 80% or so, what my tax preparation revenue is going to be for the following year. And what that allows me to do is appropriately staff that team. So if I need to make any last minute hires, I can do that still before tax season starts, and I can get them all trained up before tax season starts. And this is something that I've noticed that a lot of other accountants don't do. They'll take a $500 deposit basically, and then they'll just say, we'll figure out scope as we go along. The problem is that you have no vision.
How do you get your clients to play ball on that? Because how do you accurately price that in advance. It's people who have already been in your system, so you have their P&Ls on file, or like
New clients too. I mean, yeah, we just tell them like, hey, look, we're pricing your tax return. This is what we need to get.
so you have the
tax return
planner
price.
document, like
Mhm.
a survey that they fill out with the various
Yep.
decisions they've made financially, and you go from there, and you have a formula in-house to price them appropriately as such.
Exactly. Yeah.
Yeah.
Yeah. And so the beautiful thing about that, if you take a $500 deposit, let's say I'm your client, you take a $500 deposit from me, and you're like, all right, Brandon, just upload your returns whenever you're ready, or upload your documents whenever you're ready, and we'll get working on your returns. If I upload my documents, you start working on it. You see that I've acquired 2 new rental properties. I started the new Schedule C business. Like,
Yeah.
all right, man. All right, this is a big return. I'm like working through it, and then you finish the return. It took you 10 hours, so you bill $2,000. You send me the bill, or the $1,500 remaining. That's what you send me. I pay, and now you're working on the other returns. But what I have been, the way that I run my firm is, I want to know that it's going to be a $2,000 return in November and December. I don't want to find out that it's a $2,000 return in February, March, or April, because then I have no control.
That's
So
very
I
interesting.
price everything up front.
I will be
And-
honest. Our company is Tax Pro Marketer, and I have not ever heard somebody with this model.
Yeah, it's work. It takes a lot of work to price everybody up front. November, December, we're scurrying around, but it smooths our tax seasons out at the same
Yeah.
time.
No,
So-
I'm a convert already. No, and especially from the staffing standpoint, you're able to have your margins for every client a little bit more clear.
Yes. Yeah. So we're able to kind of build it all out in advance, and it's worked really, really well for us.
Did you do that from the beginning?
Not as well, but I always kind of had that methodology. Yeah. So at the beginning, I actually did subscription pricing. I would include, so I would take that, I think at the beginning it was $2,000 for advisory. I would divide it by 12, and then I would add the tax prep price that I thought it would roughly be. And then I would divide that by 12, and they had one subscription price they would pay monthly.
Mhm.
I don't do that anymore because of what I've learned about just how irrational humans are
Yeah.
in general.
Yeah.
I said that like I'm not a human, but I am.
These human species are
These humans.
rather unusual.
Yeah. But yeah, so what happened with the monthly billing, you can call it a subscription, whatever. It's just monthly billing. It's taking an annual engagement price and just billing it monthly. What happens is, people, when they get billed monthly, they want to derive value monthly. Even if you provided a lot of, like 80% of the engagement up front.
So
you've
I
already
want to
delivered.
pause, because this is the answer to why split out tax prep. Because
Yes.
I was inspired by you when I was on a big webinar with a few hundred tax professionals, and I'd done some thinking on it, imbibed what you had said in your thread about this. And I suggested that people price it separately from their monthly engagement. And I got a bunch of, whoa, why? Oh my goodness. And I said, I'll tell you later after my podcast with Brandon.
Yeah. And look, I mean, I was doing millions of dollars on the subscription model. So I think what I've seen with the subscription model so far is that people that have not scaled a practice are the loudest in the room about the subscription model. And whether they scale it and succeed or not, I think it can be done. It just, what I realized it just wasn't as scalable, and it was kind of adding unnecessary pain to the entire client journey. Because what would happen is, the client, we would do a lot of upfront strategy, consulting, planning, whatever. And then there might be not a whole lot of work to do other than the tax return, but clients wanted to feel like they were deriving value out of the engagement because they were getting billed monthly. It's just like if you got a Netflix subscription and you didn't watch Netflix for 3 months, what would you do? You'd probably consider canceling Netflix, right? But the reality is that we don't, like, as accountants, unless we're doing monthly accounting, we don't really have a need to provide value on a monthly basis to our clients. Like, there's not, unless you figure out a way to build out a big content library, or you're going to do some premium newsletter access or premium webinar access. Like, you got to think about, how do I give my clients value every single month if I'm going to go that subscription route? And we had tried that with some success, but I mean, what ended up happening was just clients would, you'd have some clients that want to cancel their engagement in the middle of the year. It's like, well, I've already collected 4 months of payments for this tax return that's coming up, that now I have to figure out how to allocate my subscription price to the tax return and back that out and give them a refund and then justify it to the client. It became a big admin headache. And then when I made the switch to just billing everything up front, and I realized that people were 100% okay just paying everything up front, I was just like, well, this is way easier to go, because now I'm not financing the work. The client finances the work, right? So if you're my client, and I tell you, if you want to move on beyond this podcast and get strategy from me, you owe me $4,500. If you pay the $4,500, great. I'll work with you for a year, but you've paid up front. You've paid my fees. You paid my staff fees. My costs are covered for a year. I'm good. Versus let's spread that out and,
the client isn't always evaluating the relationship. They evaluate one time.
And sometimes people are like, well, my clients won't pay up front. Cool. Break it up into 3 payments. Deposit 30 days, 30 days, 60 days, or 45 days, 90 days. But what you do is you do a 60% first payment, then 20%, then 20%. But the key is to not bill monthly, because people, it doesn't matter how well you explain it to them, as you scale, your knowledge, your training on your subscription model will break down. I know, because I lived it. You start getting out of client relationships, so you can't control the messaging. Now you have to rely on your staff to control the messaging to clients, and they're probably not as good as it as you are. And it starts to break down, and clients start going, why am I paying you monthly? It's like, well,
and this is on the tax advisory side. Monthly accounting work, you pay because there's deliverables every month.
Monthly accounting work still monthly.
Right. Yeah. But your 3 primaries are compliance, planning, and monthly accounting.
Yes.
And $6 million in fees.
Yes.
And so the man knows what he's talking about.
And for our monthly accounting, we only do the monthly accounting on a monthly basis. So I'm not trying to roll in tax compliance and advisory. It's all separate. All separate.
Okay. So like bookkeeping, but a little bit more.
I mean, we have 3 we have bookkeeping, controller, CFO. But my point is, like, even on our CFO engagements, we're billing $7,000 a month, not adding $400 a month for your tax return. I'm just doing, $7,000 a month. And then, by the way, Mr. Client, in November, December, you're going to get a $4,500 proposal.
Well, somebody who's paying $7K a month, they're a multi-million-dollar company, and they're not going to sneeze at $4,500 tax fee.
Right. I think as accountants, we overthink it. We really do. And we just, the overthinking makes it harder for clients at the end of the day. Like, I'm really not a fan of how the subscription model's been sort of pushed around, only because I've lived it and I've seen how it can fail. It can work. You just have to be really intentional and you have to be ready for the breakdowns as you scale. And I was not.
I mean, I came from a fee-based practice, but I've been very drawn to the subscription model because as a marketing agency, which has been my primary vocation now, that's what we do, right? We pay a month, we have our clients pay a monthly retainer because we're delivering value even on a daily basis. So it makes sense. And I will confess, I have pushed people towards the subscription model, having not thought through some of these dynamics that you're sharing right now. And I just, like, I'm admitting a little bit of lack of foresight on that. I'm serious. But it's because I love the subscription model for people from a regularized cash flow standpoint. And then I just have faith that people can work out the operational side on the back end and the client relationship side on the back end, because that's what we do. But it really is a different beast when you've got like a tight window of delivery.
Well, right. Because what you do is you provide marketing on an ongoing basis. So a monthly fee in your case is
makes sense.
Kind of similar to monthly accounting on an ongoing basis, right? But it's where we try to overcomplicate it and price in the tax return and price in the tax strategy advisory engagements to our subscription model. That's where it starts to lose. It starts to not work. And I think anybody listening to this that's a smaller firm, I mean, I ran this up until I think 11, 12 employees. We were doing, I don't know, $1.5 million in revenue until I finally pulled the plug. So it'll work. It's just, you are going to start you're going to start seeing pain come, and it's primarily from the, just how irrational people are when it comes to money. I'm telling you, I know it sounds weird, and I know it's probably like, oh no, you should figure out how to deliver value on a monthly basis. Look, we tried. I'm just telling you, when people get billed monthly, they expect that you deliver value every single month. Otherwise, they're going to start questioning, what am I paying for? And when they'll pay up front, why would you? I know everybody's addicted to monthly cash flow.
Right. But why subject your team to that crap?
Well, no, not even that. It's just like, if we think about it logically and objectively, would I rather have $4,500 in my pocket today, or would I rather spread $4,500 out for the next 12 months? Well, any financial advisor will tell you, get it today. Any business owner will tell you, get it today. You don't need accounts receivable.
Yeah, and you don't even discount for the prepayment. You just take it all.
No discounts.
Yeah,
never discount services.
Yeah, no, that's fantastic. All right, pivoting to hiring and recruiting and culture making, because you got 40 team members. I imagine you've had some level of churn, but I also imagine, I'm just doing quick math, you're probably paying your people decently well. You've got probably a good tier of different compensation structures, what have you. But like, give me the mistakes that you made from a hiring and recruiting standpoint. And then like, what's the one thing that you are doing that you think that a lot of practitioners aren't doing that you think would be helpful? It's two questions.
From a hiring standpoint, the mistakes that I've made are hiring uninspiring people because I felt like I needed to get people in the door. When in reality, had I waited another week or two, I might have landed a much better person. Every person that has been that uninspiring person has not worked out at this firm.
Amen.
So that's hiring too fast. Now, I believe in hiring fast, but I think that my mistake was hiring too fast, pulling the trigger on somebody that it's like, oh, this sounds good, but you still got that gut feeling like maybe this isn't gonna. Now, I've also been through the interviews that have blown me away, and those people are all still at the firm, and they are our top producers. So what I do now with hiring is I wait to find that person that's going to blow me away. And if I need to find that person faster, I invest more money into finding that person. And we've just used Indeed. We just spend a ton of money in a very short amount of time, like 2 to 4 weeks whenever we're hiring. And that has worked really, really well for us. I also have like a presence on LinkedIn that I think it draws accountants in every once in a while. So,
and are you hiring probably all types, right? Seniors down to like non-credentialed?
Yep. All types. All types. And I'm really just like, I ask the question to myself, is this person going to inspire me to want to continue leading this business and growing this business and want to manage them at the end of the day? And it's got to be yes. And, sometimes if I don't know the answer to that, I'll literally ask the person, hey, I want to be inspired by people. Tell me something that would inspire me. And then you hear these really cool stories, stories.
That's awesome. So you've maybe sort of already answered it, but secret sauce, a couple weeks on Indeed, heavy doses of, promoted listings. And do you have particular screening processes that you use with applicants?
We do. Yeah. I mean, I've got my executive assistant who monitors the applicants and puts them into a yes pool or a no pool, just based on kind of high level gatekeeping sort of stuff. Every once in a while we get like a semi truck driver that applies for a tax advisor.
No, I get it. Yeah.
So, you got to filter those out. But then we have a screening call that's held by somebody on our team. And just kind of different depending on the role. Then we have a call with the manager on the team, and then we have a call with me. So I interview every single person that comes to the firm because I want to make sure they're going to be a good culture fit.
That's good.
Yeah.
Oh, Brandon.
I want to answer your second question real quick if you got some time.
Yeah, I do want to hear that.
Yeah. So you asked me like where have I made mistakes, I think, with like people, and you might have, I don't remember if you asked me that 2 minutes ago or 20 minutes ago, but the mistakes that I've made.
We're playing jazz here, brother.
Okay, that's fine.
Sure it was, it's fine.
I can't play jazz very well, but I could talk a long time. So the mistakes that I've made with people, I see a lot of other firm owners making as well. The number one mistake that I've made is not firing when it's very clear that that's what needs to be done. The number two mistake that I've made is promoting people when they weren't ready to be promoted or in a way to save them. So I've got this bad habit of trying to save people. Like when somebody joins my team, I truly want them to be successful, and I invest time and energy and resources into making that happen. I coach my staff. We we do bi-weekly coaching and all that stuff. So I really want it to work. But what happens sometimes is I will say, okay, well, it's not working here. Let's move you into a different position. Let's move you into a different position. Let's build the role around you. I've made that mistake many times in the past. And I would say over the past 12 months, I've finally kind of turned the leaf and moved more into business owner, higher level sort of.
It's hard. That's a hard leaf to turn because
very difficult.
Because you want to be almost like a pastor with your team.
Exactly. It's very hard to tell somebody no. It's harder to remove somebody from your firm and your culture. And I see people struggling with this, firm owners struggling with this, because I talk to folks on an ongoing basis, and it seems to be like, if sales is the number one issue, it's this problem child person on my team that's the number two issue. And I see the same mistakes that I've made being replicated over and over and over, where I've got somebody that's not a great people person, they're a great producer, but we're going to put this person in charge of a team of 3 people. Whoa, did you just hear yourself? Did you just hear what you just said? It's just, you just got to be objective. You got to make the decision that, like, if somebody were acquiring your business, what decision would they make? You got to make that decision, and you got to make it fast, because your team is watching you. And that is one thing that I've learned. Your team is always watching you, and inaction is a decision. Choosing not to do something is still making a decision.
And when you do make that choice, only 10 out of 10 times is your team thankful.
Oh yeah. Every time. Time. I'm so glad that this person's finally gonna, I'll do the extra work. I'm just glad I don't have to worry about it. That's what's crazy to me. It's like, you're sitting there like, well, I don't want to burden anybody else. And what's going to happen to client relationships? But then you get rid of the person.
Only every time is it a good choice.
Every time. You always feel better afterwards.
It's hard though, man. Cause like we are also, you're probably like me. I mean, this is probably the most rewarding part of building a company is the relationships with your team. And it's hard, especially if you know spouses and all the things, and but sometimes it's the best thing for people. Like, I let go of an employee a couple years ago, and she ended up joining up with her spouse to build a business together, and they're doing awesome. And
nice.
She wasn't a great fit in our team, but she's killing it alongside her husband. And how much better is that than that? Right? Like, I want that. And we remain great friends, and it's fantastic, but she didn't have a good fit here. So, I could have kept pushing against the current, or let the current take her out the door. And I did. And I'm glad. So I know the drill. Brandon, this is awesome. I hope we get to have more conversations. I might reach out to you again at some point if there's some burning question that I see you post about and, want to bring to my people. But I'm very thankful that you took the time to share your story. Again, Brandon Hall CPA, they're going through a rebrand. So it's going to be a different name in the next 12 to 36 months, because I know how these branding processes go. But thank you very much. And man, looking forward to seeing how you develop your voice among practitioners. So
thanks, Nate. Appreciate
my
having
pleasure.
me on.